This is the pound yen on the 240, and we have a very large flag that's set up. Now, last week this wasn't valid for me. I was looking at this being an inverted triangle, but woke up this morning and we've come up for a fourth test and we've held. So let me just talk through this. This is a huge trade, 50 pips of risk. For around 250. So what we have is a swing in the market. We have a directional move lower, a pullback, a move lower. So we have made a new low, but here on the dailies, pay caution to this, that we are down at this structure level. Okay, so my personal view is that we are going to see a continuation because we've got a long extension and a small pullback. And I'm expecting a long extension here. So my personal view is that we are going to go lower, but there is no confirmation of that, guys. There is here on the 240 though. Now, this isn't the world's best pole, but it is a swing in the market and it is a directional move. I would have liked to have seen this to be more red candles, but nevertheless, it is valid. So we draw the channel out based on the closes of the candles, One, two, three. This is now your fourth touch. We've got a beautiful pin bar. It must come into structure, and if I put a structure level on right here at this level, this would have been the key level that I would have looked at anyway for price to come into, for it to reverse. You can see we've had a little bit of a reaction in the past here as well. Let's just look left. And there isn't too much, very minor to be honest with you. So we also need fibs to be hit, a minimum of a 382, ideally a 618, and you can see we've hit that 618 and we've just tapped the 786. Now what that means for me is that I would not expect price to go any higher. So when I bring back on the orders, my stop only needs to go 10 pips above the high here, because I believe we've reached the highs. If we were to come back again, it would be unlikely that this would be a winning pattern. Even though we do have a psychological number up here, for me personally, I'm not expecting price to go higher. Now here on the 240, we are in trend, so we had the move lower, the pullback, the move lower, and here on the 240, which is where the pattern is, the closes of the candles are down here. So in actual fact on the 240 there is room for this to come lower, and we're playing for that 127 extension. Now guys, this is a huge pattern and this is quite an aggressive entry. So if this is not valid for you, you can drop down the time frames and look for a more conservative entry. For me, it does meet the rules, so I have to take this. So in terms of risk, and this can be a 1 in 1 out, so I can be a little bit more aggressive because we're in trend on the 240. We've held structure, we've got a breakout pattern, we've got an incredible reward to risk, so again I can be a little bit more aggressive. But if this is too aggressive for you guys, don't take the trade. For me personally, this is now a risk of 63 pips, and I'm going to be looking for a reward of 258, and I'm front running by 12 pips. And if we do just drop down to the 60, we're not setting up any type of pattern here that I can get involved with. There's no valid double top, there's nothing. So it's quite simply, my entry on this was, we've got a rejection candle up at the top. I then need to see get rid of that, a hold at the structure level, so I'm involved in this trade. Welcome back to the pound yen. It is Sunday evening and I'm doing a bit of an update because on Friday this is one of those rare occasions where I can increase the position size, and this does happen very rarely, but I can do it when certain things happen, and I'm just going to talk through what. So right now you're looking at me being at break even. I'm just going to move that out the way, and you can see this big trade is 56 pips up. It was 111 up when we closed on Friday. But just before the close on Friday, what we did is we put in another breakout pattern using this pole here. We had a direct move, we had 4 touches, and just here we had our entry, and if you've done the educational material for flags, you'll know that this red candle was the entry. Not only that, here on the 60, this is here a break below, close below this level. And we did also have some fib confluence here as well. We hit a minimum of a 382. And if we look for targets of this smaller flag pattern, well, they come in pretty much where that 127 is, coming at targets for the bigger pattern. So usually when this happens, I can only increase the position size by 50%, but due to the size of this trade and all the confluence, I was able to double the position size and still have my stop well back from the completion of this pattern, meaning I can now move this to break even. And what that means is that this trade won't be for 260 pips. If it hits, it'll be for 354 pips. And we're back for the update on this trade, and I've done something very unusual, guys. I've manually exited the trade, and I'm going to talk through why. This is very unusual because I always allow the trade to play out. But I'm going to talk through the reasons why I've done this and why I believe now that we're actually going to break to the upside. So I'm actually out for 145 pips because I did a position size increase. But what we had is this was our big pattern, our big breakout pattern. We rallied down and put in another breakout pattern. Now what I'm going to do is just put a structure level in down at these lows just here. And look at what we did. We actually came down to this level and did not violate it. And we did not violate on the dailies or on the 240 or even on the 60-minute time frame. We held structure in all of them. And this other breakout pattern just here, which is what I used to increase the position size, we broke out the channel, we pulled back, we made a new low, but look at what we did again. We have failed to violate those lows. And not only that, this 3-point move that we have here, we've actually rallied right back up to the tops just here. And if we drop to the 60, we've actually put in what could be either a double top or a breakout pattern. My opinion is that this is a bullish breakout pattern and we're going to see a rally to the upside. Now, of course, we never know what price is going to do. And hence that's why if we have a valid entry reason, we leave it. But because we did not violate the dailies, the 240, the 60, and we've rallied right back up into the wicks and closed within the wicks, and a breakout pattern, well, this is now a very hard decision. Do we bank 145 pips or do we leave it to be stopped out for break even, or do we hold it and see if we do go on to hit for 240? Now I will say again, this is extremely rare that I would manually exit a trade, but in this instance, we've been in this trade about a week and a half to 2 weeks. The signals right now are indicating that we're going to break higher. And, you know, this is a little bit of judgment. For all I know, we could actually just break to the downside here, and I've sabotaged the trade. So this is very, very rare for me in order to do this. But we've got two breakout patterns. Both of them failed to violate structure. We went in trend, but we came up right back up to the very highs, which is a sign that there's more buying pressure than selling pressure. And then we put in a bullish breakout pattern, guys. So with a heavy heart, I've exited the trade because I believe that that is the right decision to do. So in this instance, we've banked, for me personally, 145 pips. It's slightly different for people who took the signals because I got a slightly different entry and I doubled my position size. But that's what I'll be putting down for this trade, which is a 145 pip winning trade.